Hey, what's up, my friend? Welcome to the first episode of AskRayner. So what is AskRayner, right? So this is basically, I would say, a weekly video, right, that I produce to answer all of your burning questions. Because, often I get questions from traders, when is the best time to enter a trade, Rayner? When is the best time to exit my trade, right? How do I choose a broker? How do I become a more disciplined trader? How do I manage my risk and stuff like that? And I do reply individually to all these questions. But I figured, right, by replying just to, one of you, right, I kind of like deprive the rest of you out there who are, dying to know the answers to all these questions as well. So what I figured is, why not, publish my answer in this, public domain. So all of you, or rather any of you who might be interested in those questions can actually, see the answers, right? Sometimes you may not even think about those questions and you come across it and you think, hey, that's quite an interesting question, right? So let me see what, Rayner has to say. So this is why, Ask Rayner is born, right? So in today's episode, right, the first episode, I especially, even got this, Superman attire just to, mark the significance of today's first episode. And today's question is a question from Elton. Okay, who says, right, who asked me, hey Rayner, when is the best time to enter a trade? And to be honest, this isn't the first question that I've got, right? It's I would say one of the most popular, if not the most popular question that I've gotten over the years. And I'll answer them to you in today's episode. See you there. Okay, so in today's episode, right, it is a question from Elton who asked me, right, hey Rayner, how do I know when is the best time to enter a trade? So to be honest, this is it's actually the most common question that I get from traders, right, who ask, when is the best time to enter a trade? And here is the truth, right? Let me tell you the truth, is that there is no best entry. I want to be honest with you, there is no best entry. Why do I say that? Because if you think about this, right, is there a best car out there in the market? Well, there isn't, right? If you're talking about a car that is value for money, right, that can, travel a lot with a little of gas, obviously the Ferrari is not going to make the cut. But if you're talking about car that can, move the fastest from 0 to 100, then hey, the Ferrari may be a car that actually, suits that need. So you can see that a lot of times, right, the best car doesn't exist. There is a best car for you, but there isn't a best car for the mass general population, right? The most important thing is to actually take into context, how do you define what is best, right? So this is the same for trading, right? There is no best entry, right? Because it really depends a lot on the market condition, right? Needless to say, in a strong trending market, you can trade almost any breakout and the market would go in your favor, right? If the market is in a range, right, or in a very weak trend, if you were to trade breakout, then those breakout trades are most likely to fail. So a lot of times, right, my answer is that there is no best entry. Okay, so but nonetheless, right, if you ask me in terms of entry, right, let's talk about entry. There are primarily two ways to enter your trade when we talk about entry, right? You have pullback and breakouts, right? These are, I would say, possibly the two ways you can enter a trade. Alright, so let's talk about the pros and cons to it, because again, right, none of them is the best way to enter the trade. Because pullback, why is that, right? If you were to wait for a pullback, you may miss the trade, right? Miss the trade. If you trade a breakout, it may be prone to false breakout. So you can see that this is the downside, right, to each of them. So what is the good thing? For pullback, you usually get a better risk to reward because you're trading from an area of value. Okay, for breakout, you will never miss the move, right? You never miss the move because you're constantly entering every trade when the market breaks out of high or the lows, right? So you never miss the move. So you can see that they both have their pros and cons to it. And you have to understand this as a trader. Alright, so now that you understand that there are two primary ways to enter a trade, either a pullback or breakout. So how do I go about it? What are the things that I look for? So let me share some insight with you, right? Whenever I trade pullback, right, say for example a pullback to, how about support, right? Like this is a previous resistance, turn support, right? To me, right, the best trades are those that comes to an area where it is as close as possible to the structure of the markets, right? Because if you think about this, right, if the market or rather your entry signal is as close as possible to the structure of the markets, your stop loss can just go beyond it, right? Below it, right? Compared to a trader who, say, for example, he went long somewhere at this point, from here to here, right? His stop loss is much larger compared to a trader who can enter closer to structure and have this distance as his stop loss, right? You can see that this is much tighter, this one over here, compared to a trader who enter longs at here. His stop loss is so much wider. So what is the implication of this? Of course, it's quite straightforward, is that if you have a tighter stop loss, okay, you can have a larger position size and still keep your risk constant, right? Because if your stop loss is tighter, needless to say, your position size can be increased and your risk can still be the same. So this is a big plus if you ask me, right? So if you want to trade pullback, my take is that you want to be trading it, right, as close as possible to the structure of the market, because you can have a much tighter stop loss compared to someone who enters, say, in the middle of nowhere. So that is the first one, right? Pullback. For breakout, right, breakout here is the thing that I look for. Say, for example, the market is in a range, up and down, up and down. And when it comes near the highs, right, I don't like to trade breakouts after the market has, moved quite a distance with, strong momentum, because more often than not, it tends to exhaust itself or fail at this resistance area. So if I were to trade breakout, right, what I would like to see instead is to see the market consolidate near the highs. Why is that? First thing first, right? Number one, traders would go short and their stop loss would be above this highs over here, right? So if the market were to go above the highs, this cluster of stops will be triggered, which will fuel further price momentum. So this is one, right? There is a stop orders just above the highs. That's the first reason. Second reason is this. If the market consolidates near the highs, I can actually reference this lows over here, this lows, to place my stop loss. Right? I can just place my stop loss, say, somewhere below it, give it some buffer, and that would be a logical level to put my stop loss, because I can actually reference it from this low, right? This is a minor swing low where there could be potential buying pressure to come in to push price higher. So that's the second reason, right? I have a structure to lean against, structure low, right? So this is the reason why I prefer to have, or rather to prefer to trade breakout with build up. Okay, so this is what I call a build up, basically a consolidation at the highs or the lows of the range. All right, so this is what I basically look for whenever I'm trading the markets, whether is it pullback or breakout. Right, so let's do a quick recap into what we discussed today. First thing first, we talk about is that there is no best entry, right? There is no best entry. It really depends on the context of the market, right? I also talk about, pullback and breakout, what are the pros and cons to it. Second thing I share with you is that for pullback, right, I like to trade as close as possible to the structure of the markets, right? Leaning as close to the structure of the markets, because it gives you a much favorable risk to reward because your stop loss is tighter, right? The third thing when we talk about breakout is that I like to have built up, right, where the market starts to range at the highs or the lows, because there are two reasons for it, right? Number one, I can place a proper stop loss using the build up highs and lows, and number two, I can actually, anticipate that there will be cluster of stops just beyond the highs, and if it gets triggered, right, it could fuel further price advance. Okay, so yep, this is all I have for you in today's episode, right? I hope you found this useful, and if you have any questions, or if there's a question that you want me to answer in next week episode, right, feel free to leave it in the comment section below, and I'll look at the questions and I'll answer the best question that can provide the most value to you, right? So any questions that you want me to answer next week, leave it in the comments section below, right? And if you've enjoyed this video, feel free to hit the subscribe button below, and I'll talk to you soon.